Good morning, everyone. We'll start with our monthly recommendations. First, we have Bharti Airtel, the second largest telecom company in India. First is Jio. Airtel and Jio, they are the two duopoly in this market. Although BSNL, Vodafone, they're all there, their market share has come down a lot. See, last year, the company hiked their prices by almost 20%, both Jio and Airtel. So because of this, some share of customers had gone to BSNL, but this is really not concerning because the market share of these two and the way they're growing and customer base also is too high. And Airtel in 2000, around 2010, they acquired an African company and they've entered the African market for telecom. So, and they became profitable only by 2018. So almost 30% of their revenue is coming from Africa. And looking at their average revenue per user, which is one of the key metrics we use when evaluating telecom companies, it is higher for Airtel. And one advantage of having Airtel stock is that, see, for Jio, the Jio's telecom sector comes under Jio Industries, which involves 3-4 other key businesses also. So one advantage is for having Bharti Airtel is we can have a share which is core telecom. Although Jio is expected to launch an IPO for its telecom, we don't know the dates yet, but it's expected somewhere this year. And next we have Kotak Mahindra Bank, one of the leading private player banks in the country. They are mostly into all business for asset management, core banking, and also lending. One of the main reasons for recommending Kotak Bank is because their valuation seems very reasonable right now. The stock has gone down a lot. 1,756 is a very reasonable valuation for banks. And last meeting we spoke about how RBI reduced the cash reserve ratio from 4.5 to 4%. So this will free up a lot of cash that the banks can use. So this they will use for lending. So we'll see some momentum in banks sometime soon. We don't know when. Maybe budget day is one core day we have to look for with regards to banks. And next we have Zydus Life Science, one of the largest pharma companies in India. Their core operations is from US. Almost 60% of their revenue is coming from US. Very similar company to Lupin, which we had recommended earlier. Zydus shares hit almost 1,300 last year, and from there it almost dropped to 950 rupees. So this is mainly because their Q2 results was very poor. Particularly the American business was little laggard last year. But we are seeing recovery. Few core products are supposed to be launched, and also 2 key trial phase 2 is over. So all that we are hoping that the next quarter results will be a little more better. And again, Zydus, one of the reasons why we are recommending is the price range again. Because see, last meeting, most of what we have recommended since Nifty has only been going down, it has all gone down by more than 10-15%. So all these stocks are on their almost year low. So this is a very good range for Zydus. It's been going from 1,300 to now it's almost reached 950, and now it's going up, now it's 1,000. And next we have JM Financial. This is a stock we recommended in September, and it has already hit its target of 150. Back then it was 120. So now again the stock has come to a reasonable range of 118. JM Finance is a non-banking financial company. See, the main 3 core services of JM Finance, one is asset management, other is mortgage lending, and mainly into investment banking. So this mortgage lending is a very low margin business for the company. So mortgage lending and credit business is really pulling down their business. So last year management told that they are reducing this business. So this will free up a lot of cash. Also there can be a chance of good dividends, one-time dividend that they will give once this restructuring is done. And overall we are very positive about the company in the coming year. And finally we have FDC, which is another pharma company. One of the oldest pharma companies in India. They are the one who introduced ORS to the country, and they still have over 70% market share in ORS. And looking at their past 5 years, their revenue growth has been steady over 10%. Unlike other pharma companies, they don't make a lot of noise. Company is going relatively, they're growing at a slower pace, but growing steadily. And their key products is Electrel, which is their oral rehydration solution, and Ziffy, which is again another crucial tablet for antibacteria, and also Electrolyte, which is the energy drink for Electrel. And yes, even FDC, we have recommended this company last September, and it has already achieved its target, and now it has come down to a reasonable range. Now, looking at December month review, Nifty gave a negative returns of 5%, and all our stocks almost have hit almost 10% down. Very poor performance from a lot of stocks. But looking at company specific news, see, all these stocks are fundamentally very strong. So that's why we are still asking everyone to hold on to them. L&T, HDFC Bank, L&T and all, actually they got 2 new orders, but still the stock has been going down, mainly because of the broad market selling. So there is no company specific news for any of them as such. So this is just on the basis of broad market selling. And there are 4 NFOs. First is Bajaj Finserv VLSS. So for this you have a lock-in period of 3 years, after which you will be exempt from tax. And then you have ICICI Prudential Rural Opportunities, mainly investing in most agricultural stocks, FMCGs, such companies with more rural backing. Next you have UTI Quant Fund, which mainly invests in stocks based on quantitative analysis. And finally, you have Mirai Asset Small Cap Fund, mainly investing in very small cap companies looking to boost their growth or potential with some potential in it. So for more details, please contact the mutual fund department. Okay, thank you.